This is Gail Morgan welcoming you to the Libertarian Counterpoint. Now, your host, James Just.
And thank you for joining me today with Richard Fields in the middle, John Cameron on the other end. And gentlemen, the world has finally caught up to my inflated ego. It's as we look around the world, we've got inflation running rampant everywhere. Germany, China, United States. And it's who do we blame? The Fed is stuck between the rock and a hard place. Do the, lower, keep rates low? Do they stop QE? What do they do? Are they going to stop? What, Richard, do you have any idea what the Fed is actually going to do? Or what they will do? Will it even make a damn bit of difference at this point?
The Fed doesn't know what they're going to do because they are stuck between a rock and a hard place. If they do a Volcker, if they decide we have erred in our ways and we have been helping out, aiding and abetting the inflationary environment that we're in now by the massive increase in monetary supply over the last really 20 years, but they've doubled it in the last couple of years. If they acknowledge that and start to reverse that by ending quantitative easing. Now, just so people know, quantitative easing is just a polite word for inventing new money, printing it out, or, creating it at the touch of a computer button and lending it to essentially to Wall Street, to money center banks. Basically, it goes directly to Wall Street to be used by speculators. That's how they create money. So if they do that, if they cut back on the money supply, stop quantitative easing, raise interest rates, do the things that Volcker did back in the 70s and 80s, if they do that, the stock market will crash because the only thing, and the bond market, the only thing that's keeping bonds and stocks, and for that matter, real estate levitated like it is all of the liquidity. Liquidity, again, just a polite way for talking about money, newly created money sloshing around the economy, looking for a home. Where's the home? Well, since it's going to people that already have money, they're not spending it on cars and trucks and toilet paper, or they haven't been up until recently. They're spending it on assets. Now you've got the increased money supply combined over the last couple of years with Congress giving money directly through stimulus payments directly to small business and to individuals through enhanced unemployment compensation, the stimmy payments, et cetera, to do with the coronavirus crisis. So what you've done there is you've pushed money directly into the consumer economy. That money, some of it's going into stocks. Witness the people buying stock in GameStop and other crazy stock ideas. But part of it is going into stuff. That's why the price of bread is going up. The price of meat is really going up. The price of eggs is going up. The price of gasoline is going up. We're seeing inflation in actual consumer goods. When inflation is limited to assets, people who have assets are happy. People who don't think, well, everything must be okay because the stock market is doing well, even though I'm not in it, or I'm in it in only a minor way. Can't be bad if stock prices are going up. Ignoring the fact that they're getting 0% essentially a return on their savings accounts. They can't, saving money is a fool's errand because you can't make any money on your savings. So we have a situation where the Fed, if they take away the punch bowl, the stock market and bond market crashes. If they don't, we have more inflation. Or continuing consumer inflation, because there's only so much that can go into asset markets before it starts spilling over into consumer goods markets, and that's what has been happening over the last few months.
Yeah, I got a lot of these shows lately. I've started everything I say with "I agree with Richard." That's going to stop. Can't have that. I don't know. We're not in the business of giving advice, but people who are looking for something to do based upon either one of the scenarios, one of the scenarios is inflation staying the way it is because the Fed decides that it can't raise interest rates and crash, real estate prices, bond prices, and stock prices. And the other one is that as Richard said, that you do put on the brakes of the money printing machine, the virtual money printing machine, and those things drop. So investors, I don't know, unless you're buying puts and calls, to cover your stock portfolio. What do you do? If you short stuff, there's timing. You got to cover short interest. Years ago, Richard and I talked about something to do when there was another bubble in house prices, and it was the right thing to do, but we couldn't convince other people who had say into the decision to do what we wanted to do, which was sell the house at the top of the bubble and then buy it back a few years later. So I mean, there's if you don't know what a government, if you're basing your investment decisions on what a bunch of, in essence, bankers are going to do to support other bankers, because these people weave in and out of the banking industry and the Fed and back to the banking industry and the Fed, then I'd say that's another reason for there just to be a whole lot less government. I mean, that's the lesson. I mean, because you look at every decision you make for investment now, you have to make it based upon what is some government regulator going to do, what is the government going to do, what is the tax structures going to look like. More importantly than what are my competitors going to do, or how good is my product or service. And that's just a terrible thing. We used to have, basically three kinds of risk: business risk and market. Now, more risk than that. But now the biggest risk is what the powers that we let be decide. If they smoke a lot of dope, they might do one thing. If they have a little too much whiskey, they might do another. But what's concerning to me is, the talk about who to be in the Fed, and they're talking about the some of the candidates that might be in the Fed, and they're all rah-rah about one of them. At least the regressives are, what other people call progressives, because they're more interested in transforming the economy. And I'm a little worried about somebody being cheer-led because of that.
One of them, by the name of Sarah Bloom Raskin, thinks the Fed should get into the mitigating climate change business. Now, what the Fed can do to mitigate climate change is beyond me, but she probably has some bright ideas. And if I had any bright ideas, I certainly wouldn't share them, because she'd probably try to use them. But we blame the liberal Fed members. No, they're all except one members of the Federal Board of Reserve are nominally Republicans. Jerome Powell's a Republican. All the rest of them, except for one, are appointed by and are Republican in, Rhino at least, Republican in name only, but certainly not Democrats, not liberal Democrats, just one. So you can't blame, it's not a partisan issue. It's a Wall Street against Main Street issue, and that's what it has been for a very long time. That's what it will continue to be until this bubble, and that's what it's turning out to be. I mean, I have a prediction to make. The Fed will say, whenever the stock market starts, the Fed will, talk a good game about lowering inflation. But as soon as the stock market and the bond market, particularly the junk bond market, start to crash, and a bunch of corporations go bankrupt because they can't refinance their zombie loans, when that happens, the Fed will cry uncle. They'll say, okay, we tried that, didn't work. The money gates are open again. Go out, spend money on assets, have fun, guys. That's what I predict will eventually happen, and that'll, of course, lead to runaway inflation. That's who knows whether I'm right or not, but that seems to be like a whole lot more liable to happen, since the people who, as you put it, the powers that we let be, since they own most of the assets, those are the people that have control over the financial system, over the political system. They're going to say, don't gore our ox, go after somebody else. Our ox is the asset markets. Don't harm us, harm somebody else, and somebody else is the working staff who has to pay through for all this stuff through the increased price of Cracker Jacks.
And I think you made that a point on your Substack article, I think, this week, Richard, if I remember correctly. You can look up Richard at some Substack, or you can go to libertariancounterpoint.com and find the link to the article there. But I think you made that. Is that the essential point you made?
Well, yeah, I mean, that point is that this has been going on for a lot longer than prior to the pandemic. I mean, the money supply has doubled since the pandemic started, roughly. But back in fall of 2019, September of 2019, some funny stuff started happening in the overnight lending market. The overnight lending market is where money center banks, Goldman Sachs, Bank of America, Chase, and so on, Deutsche Bank, where banks like that. Now we're talking about investment banks, not commercial banks. We're talking about banks that make most of their profits in the trading on the trading desk, whether they're trading derivatives or trading stocks and bonds or what have you. Those are the investment banks, and those banks, when they have a cash shortfall to meet their obligations, they go into the overnight lending market. And the overnight lending market, where banks borrow from each other overnight, crashed. It became totally illiquid. And normally the overnight lending market, it's 0.5% or something like that to lend on an annualized basis to borrow money overnight. Money could not be had at any cost. The Fed saw that happening and said, "Oh, we got a problem. We have a crisis sneaking up on us." So they introduced massive liquidity into the market, something like I think I figured it out, $13,500 per person for every man, woman, and child is the amount of new money in the fourth quarter of 2019 before Corona that the Fed injected into the markets to bail out primarily Goldman Sachs, Chase, Deutsche Bank, Bank of America, Citibank, and Nomura. Those were the primary recipients. But the Fed, because they didn't have to, they weren't required by law to say who the recipients were of all of that money. They didn't. But they were required to report that who got all that money as of December 31st of last year. And they did. On December 30th, they quietly leaked or issued a press release, disclosed who those banks were, the ones I just mentioned. Those were the ones that got the lion's share of all of that funny money. And lo and behold, you haven't heard it before, more than likely, because it has not been reported by CNBC. It has not been reported by the Wall Street Journal. It has not been reported by, Fox Business. None of the mainstream business channels or certainly not the mainstream media, have said that $13,500 for every man, woman, and child was spent by the Fed to bail out the same banks that they bailed out back in 2008, 2009. That is a scandal that has not been reported. Why hasn't it been reported? Well, it's an interesting question. Wall Street on Parade reported it, and the Agora publishing companies reported it basically since they picked it up from Wall Street on Parade. And Wall Street on Parade is a leftist or center-left organization that tries to cover the financial markets from a small investor perspective. They reported it, and they went out and they asked why. They went to the reporters that covered 2008, 2009 breakdown, and they asked these reporters, "Why are you guys not covering this? We gave you the story before we broke it. Why are you not covering it?" And their answer was interesting. Their answer was most of them didn't answer, but the ones that did their answer was not because we're not interested, it's because we can't report it. So they were being told, intuitively, or the inference is that they were being told by somebody, you can't report this story, or some kind of bad things are going to happen. And the story has not been reported. So you heard it here first.
Yeah, well, we know that the media spikes stories all the time, for whatever reason, whether it's nefarious reasons or they just think that their audience will find it boring and so they don't want to cover it, whatever the reason.
Yeah, but this is a story that that would be scandalous, to say the least, if it were being reported. And,
well, at least, we have Fox Business news channels, right? We have news channels that are supposed to be just cover business, right?
Yeah, they're not covering it.
And they don't cover any of this
stuff. Left. And Fox is right. CNBC is left. Wall Street is somewhere in the middle, or Wall Street Journal. None of them are covering it, and you gotta wonder, why is this story being spiked? Because it's the same banks. It's the same, as Matt Taibbi called it Goldman Sachs. Called Goldman Sachs the vampire squid of banking. Same ones, same Deutsche Bank. The ones that gave Donald Trump all of his questionable loans. These are the banks that got us in trouble in 2008, 2009. Same story, bailed out once again. COVID is not the reason, because this happened before COVID. Something funny is going on, and the powers that, as John puts it, we let be, are not letting this story out. Who knows why? I'll let you guess.
I'd like to, well, anyway, James is running the show, but I would like to talk about a matter of timing with the powers that we let be and their lapdogs, if I may.
No, happy so. We've got a few minutes. We got time. We have time today, there, John. We got time. So
we're one of the stories we're looking at is a change in the tune of the I call it nationalist propaganda media, or NPR is definitely National Propaganda Radio. What they've focused on completely has been one little tiny subset of public health, which is this coronavirus and the ill effects of it. And people on this show right now, and other right-thinking, not right-leaning, but right-thinking people have been talking about
people there, John. Correct thinking.
Correct
thinking.
Correct thinking people.
Logical thinking.
Logical. Have been talking about what people who are experts in public health, Nobel laureate experts in public health, Harvard leaders, Oxford leaders, Stanford leaders in public health have been talking about from the very beginning, that the pandemic is a disease that strikes the old and not the young, and that the fallout from the pandemic, that I like to call it, the way the government responded to the pandemic, has created all of these things. Now, the left-leaning media like Wired and New York Times and all the rest of it, they're not going to use those words. But now, recently, New York Times published an article that spelled out the fact that a 70-year-old male, because women don't get as sick from the COVID as men do, according to all the numbers that are out there. 70-year-old male who's been vaccinated and boosted is more at risk of dying from influenza than from COVID. And then they talked about the fact that children are very, very unlikely to get sick and much less unlikely to die. They didn't do the numbers. But then they started talking about all the ill effects on kids not being able to learn, and the closed down businesses and all the rest of that. So we were talking about this 2 years ago, right when this thing started. We were talking about, deal with it as if it's a public health issue, put it in the box, and don't have it crush the economy and schools and lives and force 100 million people across the planet into the worst form, probably 200 million now, of poverty, where they're living on less than $1 a day. So my question is not whether the people on the propaganda boards, the editorial boards of the left-wing stooges like Wired and the New York Times have suddenly discovered 2 years late what we knew all along, or whether this timing is completely political in nature. They've looked out, they've taken the pulse of America and decided that based upon the seething anger of the American public about all this stuff that's going on and the logical nonsense of it, that they better start letting the public know that they're leading the way and just discovered all this stuff, and oh my gosh, here's the solution, so that by the time the midterms come along, Biden and his cronies and all the rest of them won't be the ones who are the oppressors, but the ones who are opening things up because they've looked at the data and discovered that this is the truth. So here's
how convenient.
Are you saying? Wait, are you saying to tell us, John, that primary season coming up is having something to do with these non-political health decisions that are being made all of a sudden?
Yeah, that's my question to you. Do you think it's because these people who are actually quite intelligent, most of them are sociopaths, but they're quite intelligent, have finally figured out what we figured out about 3 weeks into this pandemic, panicdemic, as I like to call it, or do you think there is an underlying political motive to them supporting the position that public health experts pushed for right from the beginning? Which one?
I think it's all just a coinkydink.
Do you think it's a coincidence?
Coinkydink.
Coinkydink.
Quick pick, yeah.
And Richard,
Accidentally on purpose is what I think. It's all been done accidentally on purpose. We've printed. I mean, we've talked about inflation. We printed all kinds of money, and then we restricted economic activity, and then we're surprised that eventually those bills are going to come due.
I think right now the politicians are figuring out that fear of inflation is gaining ground and in some cases surpassing fear of dying from COVID. And once that is a majority position, which it will be eventually, then they'll say, we need to change our policy, and we'll change it in the direction that we libertarians have been advocating since day one. I mean, if you take a look at the case numbers and the death numbers based on the newest Omicron variant of the virus, case numbers are through the roof. They're way higher than they were at this time last year. But the death numbers are a fraction of what they were last year. So we have obviously got a version of the virus which is a lot less, how can I say it, a lot less lethal than the earlier versions of the virus. And don't get us wrong, the virus, the early versions in particular, were devastating, particularly for people who were obese or had other comorbidities. We've always said that. And those kinds of people always should have been protected. But most people, including most people in the working field, working in the workforce, and most people in education, particularly students, have not got a whole lot of risk. The risk of the 1998, I forget, the 1968 Hong Kong flu had a higher death rate than the worst of the COVID. We didn't shut down the economy for the 1968 Hong Kong flu, nor should we have. And it's time we reject the cult of fascism, named after Dr. Anthony.
Well, and yeah, I absolutely agree that fascism is a wonderful word. I don't know who invented that first, whether it was Reason or National Review or one of the. I saw it first in one of the either libertarian or conservative publications, but it's a wonderful term. Maybe you invented it and they stole it, Richard. I don't know.
Yeah, I don't.
The other thing I think that still people are acting like it's still news is that people are voting, with their feet still in this country, and that's a good thing, and a attaboy or a rah-rah to federalism, because people can choose to move from places like where I live, Kafka-Ornia, which is beautiful, or California, for those people who don't realize that the state has actually changed its name to Kafka-Ornia, and to places where they're treated better. And capital's moving, to places where it's treated better, and labor's moving to where it's treated better. Students are moving, their parents are moving their kids across state lines to get better education, and the fight for freedom of choice in schools. There's a fight for freedom of choice of a different kind in Texas, and that's we'll see how that pans out. But freedom of choice in education is driving people to move to states that don't teach as much propaganda and teach little Johnny to read, write, and do arithmetic. And also there will be a big force over the coming couple of years to give people freedom of choice, especially vouchers and tax credits.
Well, let's be clear where they're leaving from. They're leaving California, they're leaving New York, they're leaving Washington, D.C., they're leaving Chicago, and they're going to places like Arizona, Florida, Texas, Idaho. And so this isn't, but the sad part is these are communities and families being ripped apart because of politics, because, interventionist politics, where we've got politicians who want to dictate, our lives, the outcomes of our lives. We're having our communities, our cultures, and our families ripped apart because of it. And it's just sad. And while, yeah, we're speaking with our feet, people are moving when they can, but families and communities are being ripped apart not because people necessarily want to, but because they're feeling like they have to.
Well, and I kind of feel sorry for places like California and Texas, because people are leaving California because it's become unlivable in many neighborhoods. But they're bringing their crazy ideas, which made California unlivable, with them to places like Austin and Miami Beach. So they're bringing their politics with them, and that's bad news for the places they're going.
Yeah.
Speaking about, we got 2 minutes left, so I want to cover this last thing. In California, we've got our schools are changing the formula, and I've got some sympathy for them changing this formula, but I don't trust why they're changing the formula. Currently, now, if schools get the money based upon how often the kids are in school. So if they miss a day of school, they lose a day of pay, and now they just want to go based upon pure enrollment. And there's bad incentives both ways. And so if I trusted them for wanting to do this properly, I said, okay, it's probably not such a bad idea, but I don't trust them.
All you need to know, James, is that the bill that would change that situation from enrollment to, or from attendance to enrollment, is sponsored or co-sponsored by the California School Employees Association. Now, I don't remember learning in high school civics that a public school union could be a co-sponsor of a bill in the legislature. I thought you had to actually be an assemblyman or a state senator to be a co-sponsor. But the news story says it's being co-sponsored by a labor union. That's all you need to know.
And here's my quick 30 cents on it. It's black and white here. And what they're going to do is change the law to where they get paid on enrollment, and then make sure they never show up in the classroom, and kids never show up and they still get paid. And so it's that simple.
You're such a Pollyanna, John.
Well, I have some sympathy because, as someone who went through school with an anxiety disorder, and I literally graduated school with less than a 50% attendance rate, I have some sympathy to this notion that, attendance and tying pay to attendance there's a problem with that. But there's also a problem with, the attendance and this idea that, well, we're just going to make sure this kid goes and sits in class, whether they learn anything or not, whether it's the proper environment for them or not. We're just going to make sure they go there and sit there, and we're going to use guys with guns to enforce it.
I mean, the underlying problem is that they take money from taxpayers, they shuttle it up to Sacramento, and then they shuttle it back to individual school districts. It should go directly from parents to the school. That's what private schooling and what homeschooling and what vouchers are all about. Keep the funding source close to the place where they spend the money. Take out the middleman.
And with that, we are out of time. Thank you guys for watching. I want to thank you guys for joining me, and we can find us next week. And please remember to love everybody.